In this video, I will go through the double column cash book, which is a book of original entry. The double column cash book is made up of the cash account and bank account put together in one book. Let's go through the double column cash book together. On the debit side, the first column is the details column, where you put in the details of a transaction, such as the date. This is then followed by the ledger folio column. The ledger folio shows the page number that the entry appears in the general ledger. This generally helps to reduce the time it takes to recheck a transaction. I will cover the ledger folio column in more detail as we proceed with this tutorial. Discount allowed goes into the next column. To better understand why discount allowed goes to the debit side of the double column cash book, you need to remember that when a debtor buys from the business on credit, the business gives the debtor a discount when they pay back on time. So, discount allowed is linked to debtors, and that's why it's on the debit side. The next column is the cash column, and the one next to it is the bank column. On the credit side, the first column is the details column, then the ledger folio column, and then the discount received column. The discount received column goes on the credit side because when a business pays back a creditor, the business is given a discount by the creditor when payments are made on time. The next column is the cash column, then the bank column. Here's an example to follow in practice. These are the details of the transactions that took place in January in Peter's business. Let's go straight to the transaction on the 2nd. J. Smith pays Peter by check, having deducted 2% cash discount. J. Smith is a debtor, and at the beginning of the month, he owed Peter $200. J. Smith received a 2% cash discount. So to calculate the number that J. Smith actually paid, we calculate 2% of 200 to get 4. The discount is subtracted from 200 to find the amount that J. Smith actually paid to Peter. I'm just going to put a duck to indicate when I'm done explaining a transaction. The next transaction on the 10th, Peter pays Arbeth his account by check, deducting 5% cash discount. On 1 January, Peter owed Arbeth $100. On the 10th, Peter pays back Arbeth $100 less 5%. 5% of $100 is 5. Therefore, Peter pays 100 minus 5, which is 95. The next transaction, Peter withdrew $20 cash from the bank for business use. This is a contra entry, and I'll explain in detail as this video proceeds. The next transaction, N. Blakely pays us his account by check, deducting 10% discount. On 1 January, N. Blakely owed Peter $270. On the 20th, he paid Peter $270 less 10%. 10% of 270 is 27. 270 minus 27 is equal to 243, which is what N. Blakely pays after the discount. The next transaction, Peter paid office expenses worth $15 in cash. There is not much explanation needed here as this is a straightforward transaction. Next transaction, C. Shunt pays Peter in cash after having deducted 5% cash discount. On 1 January, C. Shunt owed Peter $100. On the 25th, he paid Peter $100 less 5%. 5% of 100 is 5. 100 minus 5 is equal to 95, which is what C. Shunt pays after the discount. Next transaction, Peter pays F. White by check less 2% cash discount. On 1 January, Peter owed F. White $50. On the 28th, Peter pays F. White $50 less 2%. 2% of 50 is equal to 1. 50 minus 1 is equal to 49, which is what Peter paid F. White. Next transaction, Peter pays A. Anderson by check less 2% cash discount. On 1 January, Peter owed A. Anderson $300. On the 30th, Peter pays Anderson 300 less 2%. 2% of 300 is equal to 6. 300 minus 6 is equal to 294, and this is the amount that Peter paid A. Anderson. Now that we are done going through each transaction individually, I will show you how to draw up the cash book. It's going to be much easier now to draw up the cash book because we already have gone through each transaction one by one. Let's draw up the cash book together. First, we'll put the cash and bank balances brought forward from the previous month. So that's 1 January in details column and balance. And then in the ledger folio account, we put BD, which stands for brought down from the previous month. In the cash column, we put $30 and $600 in the bank column. Now for J. Smith, he paid $196 and Peter gave him a $4 discount. J. Smith is a debtor and he's paying Peter back. So Peter is going to receive cash from him. So we go to the debit side. In the details column, we put 2 January and J. Smith. And in the bank column, we put $196. In the discount column, we add $4. For the next transaction on the 10th, Arbeth paid $95 after receiving a discount of $5. Arbeth is a creditor, therefore the payment made to him by Peter is recorded on the credit side. In the details column, we write January 10th and Arbeth. Arbeth gave Peter a discount of $5, so that is put in the discount received column, and in the bank column we put $95. On 15 January, Peter withdrew cash for business use. This transaction is an example of a contra entry. A contra entry affects the bank account and cash account simultaneously in the same transaction. So in this transaction, we can see that both the cash account and bank account are being affected. To record this, on the credit side, in the details column, we put cash. In the ledger folio column, we put C to indicate that this is a contra entry. In the bank column, we put $20. On the debit side, we will put bank in the details column, C in the ledger folio column, and 20 in the cash column. The next entry, N. Blakely paid $243 to Peter. So on the debit side, we record the date, January 20th, and N. Blakely in the details column. $27 is the discount column, and $243 is the bank column. For the transaction on the 22nd, it is recorded on the credit side. C. Shunt paid $95 to Peter. So on the debit side, we record the date, January 25th, and C. Shunt in the details column. $5 in the discount column and $95 in the cash column. On the 28th of January, Peter paid F. White $49. So on the credit side, we record the details, January 28th and F. White in the details column, $1 in the discount received column, and $49 in the bank column. And for the last transaction, Peter paid A. Anderson $294. On the credit side, we record the transaction, $6 in the discount received column, and $294 in the bank column. Now that all transactions have been recorded, the discount columns are added up. It is important to note that discount columns are just added up and there is no need to balance them off. So the discount allowed total is 36, whilst the total on the discount received column is 12. For the cash column, after adding up both sides, the debit side has a larger total of 145. This total is recorded on both sides. The difference between the credit and debit side is added as balance carried down on the 31st of January. For the bank column, the debit side has the larger total. The difference is recorded on the credit side as balance carried down. The two balances will be the opening balances for the next month. And that is it for this tutorial. I hope this was helpful.